Bloomberg Audio Studios. Podcasts, radio, news.
We're just here outside of Durban for the G20 finance ministers and central bank meeting that's been going on here for the last couple of days, wrapping up today. Hopeful that there will be a bit of solidarity and a communique coming a little bit later. We're very pleased to be joined by a guest, Jim Chalmers, who is the Treasurer of Australia. Has come a long way for this meeting, so thank you very much for taking the time.
Thanks for the opportunity, Oliver.
Yeah, I think we have to start with the elephant in the room. 2 weeks away from this Trump deadline. What is the status of negotiations between Australia and the United States right now?
Well, Australia has the baseline tariff, the 10%, and some additional areas like steel and aluminium, copper, pharmaceuticals. And so we're engaging with our counterparts in the US, like almost every other country is in the world. We're pretty well placed and we're well prepared to deal with these tariffs. The direct impact is relatively manageable. Our bigger concern is the impact on global demand of all of this uncertainty and volatility and unpredictability, which puts global growth and indeed global inflation at risk. And so in our modelling, the bigger risk comes from the impact on the global economy rather than the direct impact.
Okay, because 10% is basically, as far as we can tell, the lowest possible deal. It's effectively what you will have with the United States. Are you happy with that? And does that warrant retaliation or no?
We've decided to go for resilience in our own economy rather than retaliation. You know, the 10% tariff is the lowest of any countries, but you know, we've made it really clear that we think the appropriate tariff consistent with our trade agreement is zero. We see these tariffs as self-defeating. We see them as an act of economic self-harm. We've made that very clear. Bad for the US economy, bad for the global economy, and therefore not good for Australia.
Do you see any progress possible on steel and aluminum?
Well, it remains to be seen. I mean, we've been engaged more or less constantly for some months now, whether it's steel and aluminium or some of the more recent announcements around copper and pharmaceuticals. Our approach is to engage at every level as much as we can to get a better deal for our workers and our industries, our exporters, our industry and our investors, and that approach will continue to guide us.
And in terms of the negotiations around pharma, we've heard 200% as a possible figure from the United States. Are changes to Australia's pharmaceutical benefits scheme, is that something that's on the table? Because the Trump administration has been very focused on non-tariff barriers. Is that part of the conversation?
Absolutely zero chance. We couldn't be clearer. Our pharmaceutical benefits scheme is a crucial part of our architecture, our policy architecture. It's something we're very proud of. We've made it really clear that we're not prepared to negotiate or diminish or weaken the PBS in order to get a deal. We've been clear about that from the beginning. We're working through the potential consequences of pharmaceuticals being caught up in these escalating trade tensions. We do have quite a substantial export offering into the US when it comes to pharmaceuticals. But how this potential tariff might work, we're working through with the industry and with the administration.
And I'd like to also get your appraisal of the evolution of the multilateral kind of cooperative system, because obviously it's been dealt quite a shock over the last couple of months. You sit sort of interestingly between the nexus of a lot of different sort of spheres of influence. In terms of the conversations that are happening here, how is the G20 and the sort of larger global framework of cooperation dealing with this U.S. situation, and what does the sort of potentially further cooperation look like?
Well, I've been involved in the G20 in different roles for a big chunk of the last 2 decades, and we've been through 4 economic shocks in that period. The reason this one, the 4th one, is different to the first 3 is that it's primarily induced by policy, by decisions taken around tariffs. And so I think what that means for this type of multilateral engagement is that people recognise here that at a time when there's lots of volatility, uncertainty and unpredictability, the best defence against that, the best antidote to that is more engagement, more resilient economies, more robust supply chains, more reliable markets for our exports. And so I think that's really the colour and the context for these discussions. And from an Australian point of view, Australia is a huge believer in multilateralism. We're a huge beneficiary of free and open markets, and so we come to these discussions in that light.
And so concretely, where do you see kind of the most motion sort of being affected in that, in terms of different relationships with countries, ones that you maybe have not talked to in the same way in the past? How have you seen that sort of changing concretely?
I just think there's a real recognition here that when these tariffs and escalating trade tensions, the uncertainty that comes from that, but also from conflict in the Middle East, conflict in Eastern Europe, a whole range of uncertainty. I think the heartening message from the colleagues here that we've been engaging with is people are not retreating into their own corners. They're working out how to make our own economies resilient. That's a big part of the Australian agenda as well. But we're trying to de-risk these relationships without decoupling. And I think that's a major theme. It's a heartening theme because the alternative would be to pretend that at a time when these trade tensions are escalating and these conflicts in important parts of the world, to pretend that we can just retreat into our own corners. That again, I think, would be self-defeating. It's certainly not the Australian strategy.
And you mentioned defence as one of these sort of issues. There's been a huge amount of pressure from the United States for allies to spend more on defence. You saw that most concretely in NATO a couple of weeks ago, where you had that boost in pledges for 3.5% effectively of defence. Do you think Australia could get to that figure of 3.5%? Do you think that would be appropriate to join sort of allies at that level?
Well, first of all, it is a big part of the conversation here, particularly with European friends, how they'll find the 3.5% of GDP and how they'll account for the other 1.5% of GDP for national security related spending. For Australia, we're already by our standards, quite dramatically escalating our defence spending. We're taking it from 2% of GDP up to 2.3% at the start of the next decade. That already represents tens of billions of dollars in extra investment. It's a much higher trajectory than when we came to office 3 years ago, and so we are increasing our defence spending. We make those decisions, trading them off against all kinds of other budget priorities. But we say to American friends and we say to the world more broadly, we are already increasing our defence spending because we think it's important at a time where we are seeing this heightened uncertainty in the world.
And given just sort of the global volatility, uncertainty in the outlook, how confident are you of your inflation forecast and your growth forecast? How susceptible do you think those are to downward revision?
Look, there's always an element of uncertainty when it comes to forecasting economic outcomes, but especially when global markets are extremely volatile right now. But one of the things we're very proud of as Australians is there's only 2 countries here at the G20 that last year had continuous economic growth, inflation with a 2 in front of it, and unemployment in the low 4s. No major advanced economy has been able to, over the last 3 years, maintain that growth and have those inflation and employment outcomes. And so why we're proud of that is we've made very substantial progress on inflation, now sustained progress on inflation. It's given our central bank the confidence to cut rates twice already this year. But we've done that without paying for it with much higher unemployment. Unemployment is now 4.3%, historically low, the lowest average unemployment over the last 3 years for any other government in the last 50 years. We've created 1.1 million jobs, and so our labour market's been a source of strength. We had a little tick up yesterday in the unemployment data, but we've got inflation down without paying for it with a big spike in unemployment, and that's something we're very proud of.
Well, Jim Chalmers, thank you so much for your time here on the sidelines of the G20 outside of Durban in South Africa. Thank you very much. So those are the thoughts there from the Australian Treasurer in sort of multilateralism in the age of MAGA and the path forward here at the G20.